Hello everyone, welcome to the ichimokucharts.com daily analysis for gold for Wednesday, May 29th, 2013. Well, a white-bodied candle today, a candle with a lower high but a higher low, so an insight day in bar chart terms. And just looking at the trend here, and we do still technically have an uptrend in place. If we look at this candle, we had an uptrend, an establishment of the uptrend with the candle that tested to the 1400 round number level of resistance. Now, the uptrend that the market is in at the moment is not terribly significant because the market is trading within a congestion area. And if we look at the trading here for the past 1, 2, 3, 4, 5, 6, 7, 8, 9 out of 10 consecutive trading days, we have seen the market test to the 1400 round number level of resistance and be rejected from there. So this round number resistance is very, very important to this market. And if we look at this last candle here on this chart, this is the candle that is currently developing. It has interacted with the 1400 level as well, and there has been some rejection from there. So at the moment, that 1400 level is holding for this market as well. Just analysing this current candle that has finished trading, it is a white body candle, and it does suggest that the buyers have made some net bullish progress on the day between the open and the close, and they're matching the net bearish progress from the sellers for the previous day's trading. So we're getting quite some very mixed signals from day to day in this market, and very indecisive trading. So that's what we tend to see when a market is in a congestion area. We will analyse that in a minute. But looking at where the candle has closed, it's closed up towards the high, opened up down towards the low. So we have seen the buyers maintain control of this candle for the whole trading day, and whether this is enough momentum for the market to close above the 1400 level is debatable. It doesn't seem to be, but we do need to bear in mind that if the market does close up above there in a bullish way, then we could see the market trading to significantly higher levels. In terms of support down below, for the previous 4 trading days, the market has flirted with this 1380 level of support, and that is crucial to this market moving forward over the next few days as well. Now, in terms of the pattern that's developed, it is some sort of a symmetrical triangle wedge, more of a symmetrical triangle because of the large width of the pattern. And here we have the prior downtrend following the breakout to the downside from the rectangle pattern that we saw. It was a reversal, that rectangle. And these symmetrical triangles tend to be continuation patterns. So, and in line with the market trading down below the cloud and below the Kijun-sen, we will be looking for a potentially strong bearish close down below the bottom barrier of that pattern. Looking at the size of the pattern, it is quite large in relation to the previous trend leading into it, so not quite perfect. But with this congestion and this large amount of congestion that we're seeing, we could see quite a decisive move to the downside if we do see that breakout. Now, this could also be a reversal pattern, and we could see the market test to higher levels if we do see a solid bullish breakout above and a bullish close above. That would be completion of the pattern. But we do have quite a barrier above, and that is the area around the Kijun-sen at 1411. That will offer itself as very strong resistance to this market. And then we also have the bottom of the cloud coming into play roughly around the 1438, 1440 level, and that will be very strong resistance. It will stop the market from, or has potential to stop the market from reaching its target. So it's more likely that if we do see a breakout, that it would be to the downside, although not confirmed. We do need confirmation of that if it does occur, and what we'd like to see is a bearish close, and we would have more confidence in that breakout to the downside rather than a breakout to the upside, but we can't preempt the market. Now, in terms of the Fibonacci extension, and because we are still technically in this first time frame uptrend, the 161.8% level has been very important. It's been tested on 1, 2, 3, 4, 5, 6, 7 occasions and now for today's trading. We are trading just above there at the moment, but that hasn't finalised yet, so a very, very important level, and this does suggest that there is potential for the market to trade to the downside, so we will be looking for a potential lower high and lower low and a potential breakout down below that bottom barrier. And as I've mentioned, what we'd like to see is the solid bearish close down below that barrier of the symmetrical triangle. In terms of the Fibonacci retracement, the market has flirted with the 38.2% and the 50% level and been rejected from there. And the 38.2% is relatively not important because we have actually closed in a bullish manner up above there. So the next level that may come into play again here is the 50%, which is at 1406, just above that 1400 round number level. So we could see some decent rejection from there, and we do have the Kijun-sen trading just above there. In terms of Ichimoku, some mixed signals. The market is still trading down below the cloud, so we have a bearish market in the long-term time frame. The market is still trading down below the Kijun-sen, the pink line, so bearish in the medium term, but we're maintaining price action up above the Tenkan-sen, so a bullish market in the fast-term time frame. Looking at the Kijun-sen, that's pointing flat. Price action has been attracted back towards there. The barrier here at 1400 has actually stopped price action from trading back up to there. So if we do see the market test back up to 1411 where the Kijun-sen trading, we could see that hold as resistance as well. So we do need to watch that. Looking at the Chikou span, that's below the corresponding price action, so it's confirming what we're seeing in the higher time frames, but not in that short-term time frame. So moving forward, obviously 1400 still is a very important area. But if we do see a bullish close up above there, it could suggest quite a change in sentiment in this market. So we do need to watch that. We'll be watching for a potentially strong close above or below the barriers of the symmetrical triangle. But we also have very strong support down below the 1380 level. So we do need to be patient and wait for confirmation of a breakout above and below the barriers of the congestion area.